Okay, so we're going to have a look at a club account question in this video. This is the 2019 club account question from last year's exam that we're going to look at. It says in the question, and all these club accounts are laid out in the same way, similar layout to service firm accounts and indeed incomplete records. You have all of the information about the start of the year up here in the top sentence. So the assets and liabilities of Crestwood Golf Club include the following at the first day of January 2018, and they give you a list of all of the assets and liabilities. Here is a feature which was not seen before in club accounts, but is directly lifted from service firm accounts, where there is 2 years accumulated depreciation prior to this year. Then you have receipts and payments, and the receipts and payments is money in on the debit side, money out on the credit side, essentially a bank account, and we'll look at that when we get to it. And then you have all the end of year information here: closing stocks, closing bar debtors and creditors, investment interest due, subscriptions information, life membership information, and some other workings at the bottom. And it says that you are required to show the club's accumulated fund at the start of the year, then their income and expenditure account for the end of the year, the balance sheet at the end of the year, and then there is also a theory part where you're asked to consider building a new driving range for this particular golf for 10 marks. So let us start with some of the adjustments, the necessary adjustments. And similar to what I do in class, the very first workings that I always do in a club account are the bar trading account, and then secondary to that, the subscriptions. And when you do both of those, you'll find that you have got a lot of the information already covered. So working horizontally here, we're going to look at first off at the bar trading account. Now, a bar trading account is a straightforward account where we have you have bar sales, take away your cost of sales, opening stock, purchases, take away closing stock, gives you your cost of sales, and then from that you get gross profit. Now, you've got, however, a little bit of preparatory work to do to get your bar sales, because if we just refer back to the question for a moment, you do have bar receipts in here of 66,200. However, that is the money that has been taken in the cash account, or in the till, basically, in your bar. However, you do have debtors at the start of the year and debtors at the end of the year, which are also sales. They're just credit sales. The same is true of creditors as well regarding purchases. So therefore, we have to do a simple little calculation here where you have to take your bar receipts and you have to subtract your debtors at the start of the year, because if somebody owes you money at the start of the year, then you must have sold something to them last year. So therefore, it's not relevant for this year's sales. And you add on your debtors at the end of the year, and you get your bar sales number, which in this case is 66,220. You do a similar process for the purchases, except you use creditors. So the cash purchases are 38,700, but of course we have to take away creditors at the start of the year for last year's purchases and add on creditors at the end of the year, which are credit purchases for this year. And your actual purchases are 39,180. Then you can transfer both of those numbers across, and here is your bar sales, 66,220. Then you have your opening stock from the start of the year, your purchases from your work with the creditors. Closing stock is working number one. Now, I just want to draw your attention to that for a moment. In the question, if we look at the adjustment one at the end of the question, it says bar stock, including catering stock of 400, was 13,600. So therefore, if we're going to deal with the catering separately, which we need to, because the catering is given to you in the cash account separately, you see it's here, catering receipts and catering purchases, then you need to separate out these closing stocks. So when you take 400 out of the 13,600, that is where we get this 13,200 for our closing stock. That gives you the cost of sales, and that gives you your gross profit, and that gross profit is going to be an income in your income and expenditure account. And quite decent marks for that. Working number two is subscriptions. You're going to take the original number for subscriptions from the bank account, 126,900. That's how much we have received in subscriptions, or so we think. However, there are things in there which should not be counted. There is an amount prepaid at the start of the year which we need to add on. Subscriptions received in advance, and it's at the start of the year. So even though it was prepaid from last year, it is for this year. But then I want to draw your attention in the question to note number 4 here, where it says subscriptions include the following things: life memberships, subscriptions for next year, a levy for this year, and a levy for last year. None of those things are actually subscriptions, and therefore they should all be removed to get the relevant or the correct subscriptions number. So the first thing we need to do is subtract our life memberships. Now, they give it to you in a kind of a cryptic fashion here, where they say 5 new life memberships in addition to the 15 from last year, from 2017. So if we go to the start of the year in the question, we can see that life memberships are 45,000. Now, note 4 is indicating that that is 15 life memberships, 15 people who have paid life membership. So therefore, by a simple division, we can see that 45 divided by 15 people, each life membership is 3,000 euro. And therefore, when we go back to the workings, we can see that if we take out these life memberships, there are 5 of them at 3,000 each. So that's 5 by 3,000 that we have previously established. And that is where we get that 15. We take away the amount prepaid at the end of the year, which is 900. We take away the levy. Now, the levy, again, from note number 4, it says that that is 50 euro by 600 members. So all of the 600 people have to pay 50 euro. So again, that's 30,000. And then there are 20 people who did not pay their 50 euro for last year. So therefore, that also needs to be subtracted from subscriptions. That's also included in here, and that's 1,000 euro. So when you add on the prepaid amount from last year and you subtract all of these things which should not be here, the actual subscriptions number is 81,900. However, that leads us on to some other places here. For example, life membership. What we need to do with this 15 now is we need to take it over and add it to what we already have. So there's your life membership at the start of the year, the first to the first. And that is 45,000. And then if you add on 15, that means the total is 60,000. And then the question says in note number 5, it says the club has decided that life membership is to be credited to the income over a 10-year period commencing this year. So therefore, you're going to write this off over 10 years. And if you divide 60,000 by 10 years, it's 6,000 per year. And when you take away that first 6, you're going to be left with 54,000 as your life membership fund at the end of the year. So you take off the 6, which is an income, writing off of a liability, and you're left with a remaining long-term liability of 54,000. We also have to factor in this 30,000 here. At the start of the year, we had a levy reserve fund of 30,000, which is a long-term liability or a capital income. And then during the year, we added on the 30 from here, which means at the end of the year, you're left with a capital income of 60,000, a savings fund essentially that we need to we will use for a specific building purpose, um, whatever that might be. We don't need to take this 2017 levy and include it on here because it is already included in the 30,000. It's 30,000 every year. It's just that it has not been collected yet. And so therefore now it has, and therefore that 30,000 is a complete number. Now, that brings us neatly on to, once we've done bar trading account and subscriptions, then we go seeking out other adjustments. And I always say we start at the top sentence and we look for anything else which is due or prepaid. So the first thing at this point, which is due or prepaid, well, I see investment interest due. So that leads me on to this working here. Investment interest due. Well, the investment interest in the question, it says that we have received investment interest of 2,800 into our bank account. However, if you have an amount due at the start of the year, you need to subtract that because it was for last year. And then note number three, at the end of the year, we have investment interest due at the end of the year. So when we do this refinement, actually our investment interest for the year is 2,700. This is our actual income. This is a accumulated fund asset at the start of the year, an income due, and this is an income due at the end of the year, which is a current asset. That gives us a little bit more information because, of course, we're not told in the top sentence how much the investment is, but the investment must be 100% if the interest is 4%, because it's a 4% investment. So if 2,700 interest is 4%, say it is 4%, well then the investment is worth 67,500. And how you do that is you take your 27 and you divide by 4, and then you multiply by 1 to get 1%, then you multiply by 100 to get 100%, and that will give you 67,500, which is an accumulated fund asset at the start of the year. That's how much money we have in a building society or in an investment fund, and it's still a fixed asset at the end of the year, assuming we have not sold it or got rid of it. The next thing, which is due or prepaid in the top sentence, well, there is wages due of 1640 in the top sentence. Now, note number 8, the very last note of the question says the wages due at the start of the year were owed to the club coach. So that is enough information to allow me to do this under the coaching expenses. And we take away those wages due because they were owed for last year's work, not this year. But then it also says to provide for another 2,500 wages due at the end of this year. So therefore we add on that amount due. And then if you do this process here, you'll find that your actual coaching expenses are 6,460. You have, this is your expense, and you have wages due at the start of the year, which is an AFL, accumulated fund liability, and wages due at the end of the year, the current. Then you have your catering to do. Well, how did we get to that? Well, that's everything else in the top sentence pretty much dealt with. So if we look at the notes at the bottom now, we're looking at note number 1, and there is catering closing stock to be dealt with. Here's our catering receipts, money in, less cost of sales. We don't have any opening stock, but we do have purchases. Take away the closing stock for note 1, which gives you 4,500. Take this away from the catering receipts, gives you 4,000 euro, which is an income. And maybe they are doing a outdoor catering for a particular event, something like that. They've made a profit of 4,000 on that. Now, if we look at the rest of the notes at the end of the question, we have done note number 1 completely. We've done note number 2 with the bar debtors and creditors. We've done note number 3. We've done note number 4. We've done note number 5. Note number 6 talks about the National Lottery grant. It says the grant from the National Lottery was received on a once-off basis to support the day-to-day activities. If it supports the day-to-day activities, then it is what we would call a current income rather than a capital income, and therefore it will be included in the income and expenditure account, not the balance sheet. So that's just what that note is referring to. It is to be treated as a revenue item. The question is quite clear about that. Then we go on to well, actually, working 7 there, I've put in one interesting and tricky little bit. I'm going to refer you in the question to here for a moment. Do you see this here where it says transfer from building society of 10,000 euro? That is money which has been taken during the year from the building society and put into the debit side of the bank account. Now, there is no mention of a building society asset at the start of the year, but there must have been, because otherwise, how can we take 10,000 euro from it and lodge it into our bank account? So therefore, that 10,000, it's quite a sneaky little work in there, but that 10,000 is referring to the fact it says a building transfer of 10,000 to the bank account must mean there is an accumulated fund asset of building society savings account at the start of the year. So therefore, there is a 10,000 asset of building society at the start of the year. Otherwise, how could we have transferred from it during the year? Now, then we're on to working 8, which is our depreciation. Now, there is depreciation for the 2 years prior to this year. And how do you calculate that? Well, you take your clubhouse and you get 2%, and that's by 2 years, which is 22. and your equipment 26,000 by 20% by 2 years is 10,400. Both of those numbers are subtracted from the accumulated fund asset um, to get the book value at the start of the year. They've already been worn down by that much. And that's similar to service fund accounts. And of course, then this year's depreciation. Well, it's the exact same thing, except there may be a change in the asset. But in club accounts, there is not. So it is simply 550,000 again by another 2%, which is 11,000, and that is this year's expense. And then the equipment, well, that's slightly different because we had the equipment at the start of the year, which is 26, and we had that for the full 12 months. But then during the year, we bought further equipment, and we bought that on the first day of April, so we only had that for 9 out of 12 months, and that's also a 2%. You total up your two bits to get 7,450, also an expense. Now, it's worth noting when we get to the balance sheet, you're going to have to add together the previous depreciation of 22 and then this year's depreciation of 11, and that will give you 33,000 accumulated depreciation in the balance sheet at the end of the year. Similar process for equipment. Um, that's note number 7 dealt with, and indeed that's all of the end of the question notes. And then we just go back into the question, into the bank account, and there are two small things that need to be dealt with in the bank account. Well, the first one is the bank loan, and we've seen this before in other topics, where they tell you how much the loan repayment is, and they tell you that that includes 18 months interest at 3% per annum. Now, 18 months is 1.5 years. So therefore, if it's 3% for a year, for 1.5 years, it's actually 4.5%. 1.5 multiplied by our 18 over 12. So therefore, that 20,900 is actually 104.5% of the loan. And then if you get that, then you can divide that down to get 100% of the loan, which is 20,000. Then you can work out how much the interest is, and that interest is for that 18 months. Small typo there. That interest is for 18 months, so you divide that by 18, and you multiply by 5 for this year, because we repaid the loan at the end of May, and we multiply it by the other 13 for the previous year, and that's 650. This year's interest is an expense, while the loan itself and the accumulated and the interest due at the start of the year are both accumulated fund liabilities. So the loan, the 20,000 and the 650 are liabilities at the start of the year. The only other thing, we check to see if there is anything else common to both debit and credit, and we see that there is a competition. We got receipts of 28,000. We have prizes of 20,100. The profit on the competition is an income of 7,900. That's club account workings done, pretty much. So therefore, we can look now at the actual accounts. So we start off with part A of the question, where it asks you to do an accumulated fund, and you're going to record pretty much everything from the top sentence. Now, these first two, it's important to note that they are, that's 550, take away the 22,000 accumulated depreciation, and that's 26,000, take away the accumulated depreciation. The investment is a hidden investment, but we worked it out to be 67,500 in working 3. Then you have investment interest due from the top sentence, you have opening stock, you have debtors, and then this is the hidden building society of 10,000, and we also had our levy due at the start of the year. Now that is from working 2, and I'm just going to show you back to there. This is a levy due. If it is an income due at the start of the year, then that is a current asset. So that's a tricky one to spot, but once you see it, you'll know where that is. Add up all of those to get 628,780. Now, then you have your liabilities. Life membership, 45,000 at the start from the top sentence. The creditors, wages due from the top sentence, subscriptions prepaid, the levy reserve fund, and then the working we just did, working 10, yields you 20,000 and 650, both accumulated fund liabilities. And you also have a bank overdraft. The bank overdraft, let me just point that out to you in the question. The balance is on the credit side here of 7,300, so that's an overdraft. If that was on the debit side, of course, it would be an asset. Um, you take your liabilities away from your assets, and you get an accumulated fund at the start of the year of 521, 540, 318. Good. Now, then you look at your income and expenditure account, which is all of your money in during the year and all of your money out. Most of the work-ins are employed here, so you have bar profit from working one, subscriptions from working two, investment interest from working three, profit on catering, um, which was working five. Straight from the question, entrance fees and annual sponsorship. And then you had your profit from your competition in the last working, your life membership written off, and the National Lottery grant, which we were instructed was a revenue item. We were told to put it in here. And that gives you, that's 171840. Your sundry expenses, straight from the question. And then you have your coaching lessons that we had to work out, this year's loan interest, and two depreciation items. You take your incomes and subtract your expenditures to get a surplus of 65,180. Not a profit. This club is a non-profit making organization, but a surplus. Then we go down and have a look at the balance sheet. Now, at the end of the year, 2018 again. At the end of the year, you have a clubhouse of 550. Now, the 33,000, remember, is the combined depreciation, 22 from the previous 2 years and then 11 this year, giving you your net book value. Similarly, this equipment is 41,000, which is 25 plus 16. Sorry, 26 plus 15. And the depreciation on that, well, that is the previous 2 years plus this year's depreciation. You also have a financial fixed asset called an investment of 67,500. Now, in here with our current assets, from working number one, you have two closing stocks, bar and catering. You can put it in as 13,600. You will not be penalized on that. You put in your closing bank balance, which is 83,300, and this time it is a debit balance. 83,300. You have investment interest due at the end of the year, and you have bar debtors, total of 97,700. And then you put in your bar creditors. Sorry, your creditors, amounts falling due within 1 year. You have creditors, you have your wages due, and you have your subscriptions prepaid, all from the notes at the end of the question. You do your normal process here of creditors away from current assets to get your working capital, add your working capital to get 700,720 euro. In the finance buy section, you have a life membership of 54,000. That's the 60 minus 6. You add on your accumulated fund from part A, and you add on your surplus from part B, and you also add on your levy reserve fund, which is now 60,000, and you also get 700,720. There is a theory part which I'm going to leave on the screen here for you, but basically it is asking about your opinion of a future purchase. It says the club would like to build a new driving range at a cost of 350,000. Outline the options available to the club with reference to the accounts. So you have to point out some key information here. You have to point out that you have some money available when you count in that you have assets, investments you can sell, and you have 83,000 in the bank. You need to discount the levy because that is money which is earmarked for another possible purchase, not this driving range, maybe for some other capital purchase. And then you can say make some points here. Investments can be sold, and that will realize that much. They have a good, healthy bank balance, and they could borrow the remainder of the money. You could talk about how they have a surplus of 65,180, greater, in fact, when you count that they have a depreciation taken out of that, which is actually a non-cash expense. So their cash flow is actually better. It's actually 83,630. And you could also talk about some of the non-recurring expenditure. They have repaid a loan and they've bought equipment, which is non-recurring. It might need to be done again. However, as a note of caution, a sizable part of their surplus, 34,900, does come from sponsorship and entrance fees and a lottery grant. And of course, these are not guaranteed sources of income into the future. So therefore, that's something that you need to be cautious about. You need to have a general 4 or 5 decent points for those 10 marks in order to get those.